Hello everybody, let's go through CLCT's first half 23 numbers, and I think this REIT is at an inflection point. Looking at the share price performance for the past 6 months, you can see that the Western funds have been having a lot of fun shorting the hell out of this REIT, falling from 125 to below $1. I think it reached a low of 98 cents, 97 cents. The last I bought was at $1. I think the sell-off was not warranted, and I think this stuff is pretty much bottomed out, and things are just going to get better from here. So the first inflection point is of course the performance of the various asset classes. Retail is performing pretty well, reversion of 4%. I think this is just going to continue to recover simply because this stuff has performed so badly during the lockdowns for the past 3 years that things have to get better, right? It's just pure mathematics. Business parks are recovering a bit better as well, 4%. But I think this stuff is still facing a lot of headwinds from the slowing trade in China and the general slowdown in the economy. I think the economy in China is just facing a lot of headwinds because of the crackdown on the property sector, and that caused a lot of slowdown in the economy in general. But nonetheless, as long as this guy is stable, I'll be quite happy about it. So that's the first point. The performance of the DPU is quite clear, right? The top line is a small up, NPI is a small up, but when translated into a Sing, everything is down by 7 to 8%. You can see the NPI is down 8% from the Sing perspective. DPU is down 9% from the Sing perspective. And of course, this is the performance of the Sing versus the renminbi. The renminbi has really taken the FX on the chin, falling from a 510 or something in the start of the year to a 540. So that's around 8%, right? I think that's about it. The performance of the REIT in renminbi terms has been stable, but everything was eroded by the 8% collapse in the renminbi. I think the second inflection point is actually coming from the appointment of Pan Gongsheng as the new CB governor, replacing Yi Gang. I think Yi Gang has performed quite poorly as a central bank governor. I think this guy has just been poor market pricing, letting the renminbi fall as hard as it wants without any care about it. I think this is not tolerated by the central government, and this is why they are replacing Yi Gang with Pan Gongsheng. I think this guy is going to come in with a more proactive stance, strengthening the renminbi, and probably doing more to spur the economy with a looser monetary policy. Because the way the China economy has been collapsing, with youth unemployment rising almost 21%, with unofficial sources saying that it's more close to 35 to 40%. This cannot continue. It's going to lead to a revolution or something. So I think this guy has a big duty ahead to loosen monetary policies in a targeted fashion to support the economy, because the way it's going is just not sustainable. I think the third inflection point is actually coming from the falling interest rates. Look at the funding sources. You can see that they've taken a bigger share of onshore loans, with China interest rates actually falling as compared to the Western world, where rates are just climbing and climbing and climbing. You can see that they've refined some of the loans, offshore loans, into onshore Chinese renminbi loans, and captured 85 basis points of interest cost savings in the second half of this year. So I think this will have an impact. And looking at the sensitivity analysis, this is going to be a third inflection point, where this guy is able to capitalize on falling interest rates, as opposed to other REITs which have exposure in the Western world. I think the refi of the debt profile is also quite interesting. So the refi this time over here, offshore loan in light blue, all the way over here into a 5-year onshore renminbi loan, and captured the lower interest rate. So I think this is going to continue on, and this is quite good, right? Because this is going to serve as a natural hedge between the assets and the liabilities. So this is good and pretty attractive, I think. The various asset classes is still looking quite interesting, especially the AIs for the retail assets. The Grand Canyon Mall AI is interesting. Look at the what they've done. The rental income for basement 1 is going to increase by 40% post AI, which is unheard of, right? When you look at what's happening in Singapore terms, I think it's really difficult for the Singapore retail malls to achieve such numbers. And look at the AI at Rock Square in Guangdong. the AIs are going to return an ROI of 13 to 18%, right? This is extremely high. You look at what's happening in Singapore REITs, be it ESR or AIMS, the ROI for their AIs is typically like 7 to 8%, right? Only in China do you get such opportunities. So I think the retail segment of this REIT is still looking extremely attractive, especially from an AI perspective, and the organic rental reversions post the bottoming of the lockdowns in China. The rest of the asset classes is not that attractive, I think. I'll be looking for just stability instead of growth. The business park is kind of stable and can see some growth in the occupancies post the bottoming in the first quarter of this year. So look at the stuff in Hangzhou. This stuff is going from 72 to 75% and this stuff is going from 85 to 90%. For the logistics park, this is stuff over here falling from 85% to 68%. But this is apparently due to some construction of a highway, so whatever. But as long as it continues to be somewhat stable, I think this should be good enough. The last point is with the asset valuations. I think this is where it gets interesting because in the Western world, when you can see cap rates rising, be it in the US, you can see the offices in the US really taking on the chin, right? Look at the UK business also falling. Valuations are really falling, and also in Australia, you can see that recently the cap rates for Australian offices expanded by around 60 basis points, whereas in China, actually valuations are still rising. If you look at the business parks, the stuff still increasing from 23.5 to 23.5.7. So this stuff is still rising for the business parks. For the logistics parks, same thing happening, also rising. And for the retail asset class segment, total valuation has also increased from 18059 to 18094, and this is despite the fall in valuation from Qibao in Shanghai, right? Falling from 29 to 0 because they've completely written off this asset because they're gonna close it due to shifts in the settlement for this mall. So despite the closure of this stuff, total valuation is still rising. So in renminbi terms, the asset valuations for the asset classes, three various asset classes, are still rising. But obviously everything has been eroded by the fall in of the renminbi against the Sing. But I expect the appointment of the new governor to spur changes and the strengthening of the renminbi.